Hey traders, a very warm welcome to you. So one big problem that a lot of traders have, and my gosh, is something that really blighted me in my kind of first 10 years of trading: stop giving back trading gains. In other words, what are you doing that's causing this kind of move on your equity curve? So you've got this, you plod along nicely, then all of a sudden, you're giving it back, or even worse, which was the kind of one I had, which was, do well, devastating loss, do well, devastating loss, and you kind of were chopping around constantly. So you have such a good progress in trading, then all of a sudden, you'd have a loss which just wiped you out. And for me, that was an issue of trading size. I was kind of more too cocky about the size I was doing. I was trading too much size for certain things, and I'll probably tell you the story about that in a future video. So how do you stop giving back the gains? Well, the first thing is to recognize exactly what's going on. So to assess, your trading. And I've done a 10-part video series, which will either be up already, which you can go and check out, or if it's not up already, it'll be coming up soon, where we talk about literally assessing what the causes of it. We can say stop giving back the gains, say we'll just stop giving back the gains, but there's some reason you're giving back the gains. Now, is that a strategy reason? Or is it B, a mindset thing? In other words, is it because your strategy is just not working and it works very, very well for a certain period of time, and then all of a sudden the market conditions change, you're trying to use the same strategy, you're trying to hammer in a nail with a spanner, it doesn't work, you're going to lose money. So is it that? So you need to assess, am I just employing the wrong strategy for the job? That is going to stop me from giving back gains. If I recognize the market conditions have changed, I either need to say, hey, don't trade anymore, or I need to use a different strategy. Let's say you're buying, constantly buying dips, first pullbacks kind of thing to a moving average or whatever it may be, and then we suddenly go into a range bound environment with no volume. That strategy is going to kill you. So there's your reason for giving back your gains. Okay, another one, which is probably the more common one, is mindset. Okay, guys, this is kind of like, you make a big drastic mistake. So what you don't realize though is that you've probably got away with the big loss for quite a while. You've whisked it by a whisker. You've got away with a few points profit. You've got away with a small bit of thing, but all of a sudden something comes along and it hits you. So what do you do to stop giving back the gain? You need to analyze and assess and say, hey, listen, if I'm making good money, I need to be aware that where's the risk in my strategy? Where's the risk in my approach? Because somewhere along there's a risk which is making you give back the gains. Okay, that's for the drastic one here, right, by the way. And then recognizing that and trying to put in strategies in place to stop doing that. Now, if we go back to probably the more common one for most people, which is, hey, listen, I get this kind of thing, and then I give it all back again, and I get this, and I give it all back, and I'm up and down, up and down, up and down. It all comes down to either, you have yourself a ratcheted trading stop on your equity curve. You say, listen, I know this is going to happen to me, but I need to have something in place that stops this brutal damage to the account. So let me have a trading stop on my equity curve. Let me say, hey, listen, a moving average will do the job, guys. Listen, a moving average on my equity curve, as soon as I hit that, I stop and I reassess, or I take time off. And then I come back in again, and maybe I have another stop here. And if I hit two of those in a row, I pull back and say, listen, something that's not working. It's probably strategy as opposed to mindset. Do I need to reassess? Do I need to dial my size right down to kind of half size, quarter size, to avoid that? Or instead of stopping completely, you can do exactly that. You can say, listen, when I have a drawdown of X% from my highs and my equity, I reduce the size. So, kind of like the betting systems we talked about where you're reducing the size for a loser. As you're losing money, your exposure is being reduced. Now, the downside of that, of course, is that to get back up, it takes you a lot more trades because you're in quarter size. It takes you four times as many trades as it did to get you back up to the same amount. But what we're trying to address here is not getting back up to highs. We can worry about how we do that later. It's to not give ourselves back. If we can stop and stall everything and stop giving back the gains and then reassess from this base point as opposed to here, over time, we're going to be up here as opposed to being down here or even being down here. So that's the idea of it. So first of all, number one is to assess our trading and work out why. But if we can't do that, or if we think that we need to do something else as well, then adding a pure kind of trailing stop system on your equity curve where you reassess, where you look at things, where you reduce your size, something that limits the damage when things aren't working. Because in this period here, things aren't working. Something is going wrong. So you need to look at it and analyze it and give yourself the opportunity by saying, hey, I'm not going to trade, or I'm going to trade minimal size, will reduce that damage further. So let me know in the comments below, guys, what you think about stop giving back gains, how you stop giving back the gains, and any other ideas other than those that I've given there for best execution on that strategy. All right, guys, take care. See you in the next one. Bye-bye.